Okay, folks, welcome back. This teaching is going to be on the Commitment of Traders Report, Insights for Effective Price Action Analysis. Okay, Commitment of Traders Report in graph format. Points of focus for this module: how to locate COT data, loading Commitment of Traders graph, insights from the commercials, and how commercial hedgers can aid in your analysis. Okay, folks, we are on barchart.com. Okay, this is a website I use to illustrate Commitment of Traders reports in graph form. And we just click on this little toggle box up here to go to a commodity. And we're going to look at the Canadian dollar. And right now, the largest open interest is on the March contract of 2018. So we'll click on that. And then we'll click on technical chart. Now we're going to scrub down into this area here. So we're going to go to candlestick. We're going to turn the volume off. I don't want to see this little box because it's very distracting to me personally, but click on weekly contract. We're going to go to 3 years is about a good enough time frame to see. And then we're going to go to Commitment of Traders. Now there's several here. There's Commitment of Traders disaggregated. Then we have Commitment of Traders Financial Traders Report. Then Commitment of Traders, we just want this one. Okay, click on that. And we want to maximize that to large. And we're going to click on Draw Chart. And it'll pop up here. And again, let's take our volume off and then redraw that. So that way we have our chart with the Commitment of Traders report plotted. Now you'll notice that there is a red line, which is commercial speculators. There's a dark blue line, which is small speculators. And there's a green line, it's large speculators. Now large speculators are like large funds, large private traders. Small specs are like anyone else in the retail world. Generally, they're wrong about everything they're doing. And the commercial speculators are many times diametrically opposed to this group over here, the large specs. So what we want to be looking at is this red group, because when they get a very large position, now notice there's a zero line right here. Okay, draw that out across the entire graph, and I'll put that on the chart so you can see it. By having that, anything above the line would be deemed bullish, and anything below it or at it would be neutral to bearish. All this in here, you can see the big run up in their positions. This is their buying. Okay, so commercials are large hedgers, the people that really know what's going on, banks, institutions, insurance companies. Large speculators are traders. Okay, they're large fund managers or private traders. So when we see these big buildups, this would be a net long position, a very large net long position, and you can see eventually price does in fact have a large rally up. Now during all this consolidation here, you can see even though the commercials were below the zero line, which would be net short, they went back above the 0.9, and you can see now they have a little bit of a move higher, and they dip back below the zero line. They started selling off, and then watch what happens when these equal lows have been taken out right here. Huge buildup of net long positions, and look at the reaction in price on the Canadian dollar as a result. Huge extrapolated move on the upside. What's it reach for? A run above this old high back here. Okay, so now we're in an area where we're heavily net short by the commercials, and you've seen a nice big drop down in the Canadian dollar as a result, which is a bullish move for foreign exchange or Forex. The pair is the dollar CAD. So if this is the futures contract, this is what we're looking at. If this is bearish, it's going to be bullish for the dollar CAD pair. If this currency in the futures market is bullish, it's going to be bearish in the dollar CAD pair. So what I like to look for is a significant net long position to justify my long entry, and or a heavy net short position to justify my short position. So if we go back and look at historical data, we can see that there's major key turning points that the commercials or the red line indicate a very strong willingness to be a buyer or seller. And by using this information, we can glean insight and also build confidence behind our trades because we know that we have smart money entities behind us. I'm going to show you one more example, and we'll probably have seen enough. All right, so we're going to use the euro, just changing that first letter to an E gives us the euro on a weekly. Nothing else needs to be changed down here. So we have again the euro in a consolidation. Every time there's a big buildup, there's a small little rally in here. Big buildup in their commercial holdings. It rallies, and as price starts to drop below these equal lows, look closely. Okay, we have equal lows here. Price dips down below that on a weekly capacity, and we are in a net long position. So commercials are accumulating those positions long, and notice what happens when we get above these equal highs here. We have this high, we have this high. Draw that out in time. That's the 120 big figure. They're net short at that time. Okay, so we have seen liquidation from 120 down to 117, and now we're consolidating again. So the benefit of having this tool is to, well, gauge the maximum saturation in terms of buyers and sellers. Because if you haven't noticed already, the red line, they will put the top and the bottom in the marketplace. When everything gets to an extreme, whether it be net long or net short, they usually make the higher low of the entire move because their pockets are way deeper than ours ever will be, and they are the market. Notice also that just because they swung below the zero line like they did here, that is in no way indicative of a directional change. In other words, if they're bullish up here and they swing down below the zero line, that does not mean that they're going to expect this thing to start going lower. All this means is they started doing a transition from a heavy long position to now that of a heavy net short position. Okay, so they were selling in this rally. The problem is, when I learned this concept from Larry Williams, I felt that this was going to be the top. As soon as this happened, this would be the top and it should drop down. I did not understand institutional order flow where the orders need to be tagged first. So there has to be some measure of liquidity ran out, which we see here. Then a net short position by the commercials would be significant or noteworthy. So again, this is just an introductory lesson to get you acclimated to the Commitment of Traders report. If you want to learn more about this subject matter, these two books here are, in my opinion, the two best individual books on the topic. You can see they're rather inexpensive. And there's also a book by Larry Williams, How I Made $1 Million Trading Commodities Last Year, where he basically introduced it to the trading community, and it took off like a wildfire. Problem is folks just simply looked at the net short or net long position, and Larry himself even mentioned that this sometimes got him in trouble. But there are enormous benefits to understanding this information when you have also understanding of institutional order flow and how to read price action. When you blend these two things together, you get really amazing results. And it's not limited to just currencies. It's in stock indices, and it's in bonds, and it's in commodity futures. Hope you enjoyed this presentation. If you'd like to find more, you can visit my website at theinnercircletrader.com.